Okay, good afternoon, everybody. Good afternoon. Welcome to Paul's Monday Market Update, number 213 for Monday, 2nd of February, 2026. Hope you're all well. Hope you've enjoyed a good weekend, and yeah, hope you're ready for what's going to be another interesting week ahead. Great to see you here, Sean. Thank you. You're all welcome. Um, as always, okay. As always, it's great to have you here. As I said, it's been a rather eventful weekend, hasn't it? It's going to be an eventful week ahead. If you're joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can squeeze in the next 25, 30 minutes, looking at strength and weakness within FX markets, looking at the some charts of interest, and then looking at live markets. It is not a signal service, it's not trade recommendations, it's just what I'm looking at, which may be of interest or use to yourselves. And as always, you are very welcome here, but just remember, you're always responsible for your own trading decisions. And also, it's the final call for the Q1 Dollar Edge FX swing trading mentorship. So, if you want 8 weeks of swing trading mentorship as part of a small group, then you're welcome to join that. That's what starts this week. You can ping me, okay, for if you've got any questions, or once again use that QR code to give yourself some insight. Next one is Amazon. So Amazon is their earnings are Thursday after the close. Okay, so what do we know about Amazon? Well, everybody sort of kind of would be able to tell you that that kind of growth in the sort of AWS that's kind of stabilized, and now everybody's looking at can they expand that margin? All right, okay, that's the kind of story they're looking at. On the sort of Amazon retail side, well, it is really all about discipline in terms of kind of cost controls and logistics efficiency. All right, that's the sort of thing they're looking to see. Is that going to show any kind of profitability after years of investing in that kind of side of the business? And not unsurprisingly, over the last couple of years, there's been lots talked about their capex in AI and their investment in AI. But really, you're looking in terms of the returns on that. You're looking at kind of like long dated returns in that. So that means all the kind of the sort of near term expectations are a bit sensitive. So Amazon, if you're looking at it in terms of fundamental play, people are now looking at it kind of its operation leverages, its kind of commentary on its margin more so than pure revenue growth. Right there, those kind of expectations matter more at the moment. When I look at the chart here in front of us, I look at the price there. Okay, yeah, do you know? Yep, it has been in a upward trend, and yep, we have that kind of Liberation Day sort of pullback, and certainly we've pushed high from there, but I wouldn't exactly say it has been a beautiful trend. Okay, there has been hiccups along the way. Certainly, what I would look at as seeing is that we made this kind of pop to $250 there. Okay, sort of latter half of 2025, but we just did not get above it at all. All right, and then the 50 has acted as good support, okay, and we've popped up again. But I wonder now. I would probably see as $250, all right, and the 20-period moving average we're a bit squeezed beneath there. You might say, well, Paul, is that not just a little sort of double top you have there playing out there with that rejection candle as possible? Once again, it might just be a bit of profit taking there in front of the sort of earnings on Thursday. What I'd be seeing is for me, if those numbers are good, and everybody's happy and we're back to giddy life, well, I need to see us book $250 and holding above there on the weekly chart. If those numbers are poor, and that actually this rejection candle is giving us some insight, well then, certainly $230 with a 20, and then down to sort of a 220 with the 50, as that's where my drift would be. So I'll be watching that to see how that plays out later on this week.